What's up everyone, it's Scotty with Money Investing. So markets here pushing higher on the day and on the week. They are going to be very strongly up. And the NASDAQ, more specifically, the tech sector obviously has been doing incredibly well. We talked about it yesterday in our market update video. I sent a whole long post in our Discord as well in the text channel going over my thoughts and my perspective and opinion on the inflation market, the inflation, of course, economic data that's coming in, and of course, not to mention the interest rate expectations and how the Federal Reserve might be very close to finally pivoting and getting in line with the market's expectations of now 6 cuts priced in for 2024. So I hope you guys are doing great and are having a great week here so far. Of course, the markets have been pushing higher quite a bit. We have seen a significant reversal in NVDA, in Tesla, in NASDAQ here on the day today. And that's exactly what I'm going to be discussing in this video. I think next week we've also got a lot of earnings coming out, not to mention the Federal Reserve, Chairman Jerome Powell, and the FOMC meeting scheduled for July 26th. So you got lots to unpack here. As always, make sure that you drop a like, subscribe, get access to all the trade ideas. I know a lot of members making a killing on Twilio, Fiverr, stocks that have been pushing higher. And of course, United Health, shout out to a couple members for putting it on our radar. And of course, a lot of them ended up making very nice gains on UNH as well, which is now up a little bit over 7.3%, so trading past $480. So congratulations to you guys. So Dow gains more than 100 points Friday after a strong earnings averages headed for a winning week. So Dow Jones Friday as strong earnings results from some of the biggest banks and companies kicked off the earnings season. So today, officially, the earnings season just gets started. And we had JP Morgan, Wells Fargo, Citigroup. A lot of these companies report absolutely incredible numbers. Net interest income has skyrocketed for these banks, and JP Morgan Chase beats analyst estimates. And this right here were the numbers: $4.37 earnings per share versus about $4 estimate, and revenue coming in at just over $42.4 billion versus a little bit under $39 billion. So net income surged over 67% to $14.5 billion, or $4.75 per share, $4.75 per share. And when excluding for the impact of its first public acquisition early May, a $2.7 billion bargain purchase gain from the government-backed brokered takeover, as well as loan reserve bills and security losses tied to the purchase, earnings were $4.37 per share. Again, very strong numbers, still higher than what the expectations were. And this right here is what the heat map looks like. We still have a little bit of time, 12 minutes until the markets close as I'm recording this video. But nonetheless, we did see a big reversal for NVIDIA, for Tesla, for Meta. A lot of these companies were pushing higher, started the day green. We're starting to see a bit of a momentum back lower. And of course, a lot of healthcare and biotech names were pushing higher with Eli Lilly. We did have AbbVie, Merck, UNH. A lot of these companies in this sector particularly pushing higher. Of course, energy selling off, semiconductors selling off, comm services, telecom services, financials, and of course, basic materials. All these sectors pulling back here on the day a little bit. This right here is going to be the entire market. Again, energy, we're seeing a lot of liquidity kind of come out of that sector. Semiconductors, the same thing. Healthcare and healthcare planes are really the ones that are leading the way so far today. So this right here, again, one day healthcare has been the big leader on the day today, except all other sectors are selling off and pulling back. But over the last 1 week, of course, we've got all 11 sectors in the S&P 500 pushing higher. So we're seeing basic materials and comm services and technology and cyclicals kind of lead the way. Those are your big tech stocks once again. And over the last 1 month, of course, we still have all 11 sectors pushing higher. Healthcare just turned positive after the very strong momentum on the day today. Wheat prices, corn, ethanol, cocoa, live cattle, rough rice, all of them pushing higher, with soybean, crude oil, Brent, palladium. We got volatility, everything selling off. Bitcoin's back to trading at just a little bit over 30,000. There was some news around Binance, and Ethereum back just a little bit over 1,900. It was trading as much as $2,000. We saw a lot of momentum for both of these cryptos, but it's been a brutal day for cryptocurrency. So NASDAQ here down 27 basis points, so a little bit of a pullback. We got the S&P 500 down 16 and the Dow Jones rallying just over 100 points. We did have only 2,000 stocks pushing higher and 4,300, almost 4,300 stocks selling off, so they were declining on the day today. So when it comes to market breadth, we did see a lot more stocks sell off versus the ones that are pushing higher. And surprisingly so, I mean, you've got the Dow Jones pushing higher. So there's a lot of momentum for Dow and more value-oriented companies than there was for tech and, of course, big tech. So going over to some of the commodities here. So crude oil seeing a significant pullback, so back under $76 per barrel. This right here is going to be that support level to keep in mind for crude, sitting roughly at $72, $73 a barrel for crude oil, and of course resistance all the way up to 81, $82 a barrel. So this right here, a very, very important resistance level to also watch for crude oil. Talking a little bit about yields, and the 2-year continues to trade above 4.7.5%, so up over 2.5%. And we're also obviously seeing the 10-year yield trade above 3.8% as well, up another 1.5. It was trading as much as 4%, but it's now traded back down, so it's rotated back lower under 3.9. We're seeing a little bit of that momentum once again. One thing to again, of course, keep in mind is that we're seeing a lot of treasuries being dumped into the market, not only from the Federal Reserve because they're allowing for their balance sheet to roll over, and all these treasury securities, mortgage-backed securities, they're rolling them over, and as a result, they're being paid back the principal. That's supply. And then, of course, the Treasury Department, which is part of the fiscal policy, they're also raising capital so that they can fund their operations, continue to run the deficit, and, of course, finance operations in the U.S. So that obviously is dumping a lot of supply in the market, which is creating a lot of imbalance, which is what's causing the yields to spike here because, again, there's an inverse correlation between prices and yields. Now, going over to BTC, pretty significant sell-off. I think, again, Binance, they're going to be closing a lot of accounts. So there we go. Bitcoin slides back to 30,000 amid $245 million in liquidations. So Bitcoin fell back to $30,000 on Friday as market hype surrounding the court's recent ruling on XRP has begun to fade. And most liquidations occurred across combinations of BTC, Ether, and XRP trades as well. And it's going to be for, let's see, the volatility has triggered $245 million in liquidations across the entire crypto market at least in the last 24 hours. So that, again, is a little bit of an unfortunate event for BTC and, of course, for a lot of stocks that kind of trade off of Bitcoin, such as Mara, CleanSpark, Riot, Coinbase. A lot of them are down, obviously, anywhere between 2 to 6%. And that is really just the volatile nature of the cryptocurrency market. Ether back under $2,000, down over 4.6%. Pretty brutal red candle at the moment for Ether as well. Talking about the markets now, S&P 500. Seeing a little bit of a pullback, so red candle coming in, so some momentum back lower, some sellers stepping in. There continues to be a bit of a negative divergence. Like I said, the momentum, the sentiment's always been really strong over the last 6 months or so. In 2023, it's been very, very good. And so far, 4,600 is going to be that next target, that next resistance. We still are up very nicely year to date, up almost 17%. Support level is going to stay put at 4,450. So we may continue to see these pullbacks and these dips as we saw over here. So S&P dropped a little bit over 2.7%. Right now, like I wouldn't be surprised if we drop 1.7, close to 2%, come down to 4,450, validate ourselves at that level, or even down to that 21 EMA, and before starting to make that next leg up higher, considering how much momentum and sentiment there is for S&P 500 for the markets in general, right? For equities. Talking about the NASDAQ here. Same thing, a little bit of a red candle. So again, we saw a bit of a pullback here for the NASDAQ, a dip of almost 4%. Then we started to rally. Then we saw another pullback right here. You can see that we dropped over 2%. Then we saw another huge rally, a breakout. And now I wouldn't be surprised once again for us to come down, trade as low as 13,800. That previous resistance is actually going to be a support level to watch for the NASDAQ. And the next target, the next resistance is going to be 14,600 for the NASDAQ as well. That's what I'm really paying attention to. That's what I'm watching. Now, from a valuation standpoint, again, I want to remind everyone that we are trading at closer to 20 times earnings multiple on the S&P, probably around 25 times earnings multiple on the NASDAQ, which obviously is still a little bit better than the earnings yield on the, well, actually the yield on the 10-year treasuries. But you got to keep in mind that as prices continue to move up and earnings season just got started today, if earnings don't catch up to the price, the valuations are once again going to be a little bit more on the overextended side, a little bit more on the higher side, which is why I've mentioned before that I'm not like super aggressive at these prices because I understand the temperature of the market, which is a little bit more towards, the higher end. It's not extreme levels. I mean, individual stock wise, we can maybe argue that yes, there are some individual stocks that are trading at extreme valuations, but when you look at the market on an aggregate basis as a whole, it's not really that bad, right? 19.5, 20 times earnings is a pretty normal average for the market. So on an aggregate basis, it's still trading at reasonable levels, but individual stock wise, I mean, I would not be touching certain stocks, right? There are certain companies, sure. I mean, I can still buy Enphase. I can still buy maybe, the dollar cost average into Vanguard Growth ETF, a little bit more diversified because as I said, market as a whole may not be overvalued, but there are individual stocks, right? So may not be touching NVIDIA, may not be touching Tesla or Meta at these prices, considering that they've already gone up hundreds of percent this year already. Talking about Apple here. So Apple just consolidating sideways. So again, 21 EMA is going to be that support at 187. Resistance is going to stay put at roughly around 194, closer closer to $195. And again, that 21 EMA closer to 187 is going to be the level to watch. Lots of consolidation for Apple at those prices. Amazon here, again, with a very nice, decent move to the upside, trading as much as 134, 135, and support level is going to be over here at $131. We'll be looking at potentially selling some calls maybe next week if we do see some more momentum higher. The premiums have not really been that great. I don't know, like, I feel like Amazon's not that volatile, and the beta is low. Standard deviations are low. That's why you're not seeing a lot of premium, because the expected volatility, the implied volatility is really, really low for Amazon at the moment. So eventually, maybe I'll sell one because it's free money anyway, but I need to get at least some decent premiums for selling out of the money 30 days out calls. So next up on the list is going to be Tesla, of course, and Tesla on the day pushing higher up over 1.2% to 281. This right here is going to be that support at $275, $276. So you got a very nice, decent support here, resistance all the way up to 312. So that's going to be that level to watch for Tesla, and of course that support at that 21 EMA sitting roughly at $261. So that right there is going to be that level to also watch for Tesla moving forward. Talking a little bit about NVIDIA here. NVIDIA had a big reversal today, right? So it actually traded all the way up to 480 and then dropped intraday. Like intraday dropped over 5.5%. So pretty substantial drop for NVIDIA, definitely selling off. So this right here is actually going to be a support to watch for NVIDIA, roughly at around 439 all the way down to as low as 407, down to as low as 347. So we've got lots of levels to watch for NVIDIA. And of course, the market cap is still at just under $1.2 trillion. AMD was having a very strong day. Like at some point, AMD was trading as much as 121. And intraday, it absolutely got crushed, 5.2% sell-off intraday. So definitely selling off quite a bit with a very strong long wick to the upside and a lot of volume driving the price lower. That just speaks a lot of weakness, right? That's a lot of weak price action for advanced micro devices. Like I hate to say it, but the bulls didn't do a good job kind of holding the price higher, and we traded all the way down to sub 116. It's pretty much flat on the day now. So support level is going to stay put at that. This right here, $106. So this is going to be a very, very strong area of support to watch for AMD, and of course all the way down to those moving averages, sitting roughly in the 80s, $81, $84. That's going to be that support to watch for advanced micro devices as well. Talking a little bit about Meta platforms, and Meta here pushing down a little bit, down about 1.5%. So again, I think it's very overextended, a little bit more on the overbought side. Support level is going to stay put down to $300 per share, all the way down to those moving averages. So again, if I remove everything, you'll notice that it's consistently validated those moving averages. It's respected that every single time. So that 2150 EMA is going to be that support level to watch for Meta. And again, got some covered calls. One of them is actually going to expire at the end of this month in the money, so I might get rid of some of the shares, but then other shares I'm just kind of holding on to this company as well. Talking about PayPal, and PayPal here on the day pulling back a little bit, about 0.5%. Not a surprise because most stocks are selling off here. Support level is going to stay put roughly around $70, $71. So this right here is going to be that support level, resistance to this lower high for PayPal. And of course, we got those moving averages to also watch for PayPal as well. So very nice move to the upside. Still got long ways to go. We're still waiting on some fundamental update from PayPal as well. But I do think that the valuation and of course the earnings yield, PayPal and Phase, these are some of the companies where I do believe the opportunity really is when the money actually starts rotating into these companies, given how low they are at trading, relative to their actual earnings. So these are some opportunities that I'm really paying attention to and not really focusing on, some of the more big tech companies that have already rallied so much. Talking a little bit about Square now, and Square here starting to pull back as well. Very similar price action to PayPal, down about 1%. Support level is going to stay up at roughly $70, $71. So this right here is going to be that support, and of course resistance all the way up to 85, 86 inside this red rectangle. And of course we've got the price itself almost getting up to its overbought level here, 68 RSI. MACD's been rallying and pushing higher as well. So again, support level is going to stay up roughly at around $70 per share for Square. Talking about Netflix here, and Netflix coming down almost 2%. So this right here is going to be that resistance level to watch at 458, 460 for this company. And of course, we got that 21 EMA, but we've also got a very strong negative divergence for Netflix. So you can see that we're seeing consistent lower highs, while at the same time the price is actually making these higher highs. So that's the negative divergence. I'm not super confident with Netflix getting another breakout past 450s. So support level 21 EMA at 431, and I wouldn't be surprised to see it down in the low 400s. Once again, valuation's high, technicals a little bit overbought here, and again, there's a negative divergence to keep in mind for this company as well. Talking about Google, and Google had a very strong day yesterday and starting to push higher, so outperforming on the day relative to its other companies, up over 70 basis points. And Next resistance is going to be 131, 132. So that's going to be the level to watch. And of course, this right here is going to be that support at roughly 122. And we did see a little bit of a downtrending channel going on. And then we saw a very nice breakout on decent volume for Google once again. So sub $100, I think $96 where I would be interested in buying more Google. That's my fair value. Talking about Microsoft, and Microsoft on the day also outperforming on the day, so pushing higher 75 basis points, but of course intraday selling off. This right here is going to be that resistance at closer to $351. Starting to see a bit of a pullback once again. That 21 EMA is going to be very, very important level to watch, down to as low as $322. Very strong support from a technical standpoint for Microsoft as well. And finally, we got Shopify and Enphase. Shopify pulling back down 2.7% down day. Support level is going to be at $65. So that right there is going to be that support resistance all the way up to $75 per share for Shopify. And finally, my favorite, Enphase Energy. Starting to see a bit of a pullback here and down about 2.5%. Resistance up to $188. Support level at close to $151 for Enphase as well. So we're seeing a lot of consolidation. Of course, my fair value is going to be closer to 144, 130s. Like I would love to buy it more in this good deal area in the 120s. And that's really what I'm looking forward to. If it comes down there, great. If it doesn't, oh well, got some position, got a little skin in the game, and we'll take some profit, whatever we can get. So I hope you guys enjoyed this video and found it helpful. Make sure that you drop a like, and of course, don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. Trust me, we're crushing it when it comes to options, when it comes to just swing trading, when it comes to trade ideas, when it comes to intrinsic values. Yeah, I'm happy to help you with anything, whether it's fundamental analysis, technical analysis, macroeconomics, options trading. Happy to guide you, and of course, when you're part of our community, you will get learn all those things as well. So as always, happy investing. I'll see you all in the next video. Take care.